Well, let's focus on a stock that did very, very well in the last couple of trading sessions, that KEI Industries. Morgan Stanley, they're very optimistic on the prospects of the company. Mr. Anil Gupta, the chairman and managing director at KEI Industries, joins us on the show. Hi, Mr. Gupta. Well, there is some optimism that, the Indian economy is actually quite good and in a good place, actually, though the Indian market's a little bit wobbly. What is your experience with regard to demand on ground, both for cables as well as wires, and where are you seeing more traction?
Good morning, Nigel. I think Indian market is still looking good. I'm talking of basically energy sector. There is a good investments coming up in energy sector across in power generation, power transmission, power distribution, and a good demand coming from basically solar projects. I think user industry is also looking good. That you must have seen that power demand is rising across the country. So power distribution companies are spending a lot of money for undergrounding the cables from removing the overhead networks. Even in cities, undergrounding is a good prospect. So I feel that this sector will keep on moving. Secondly, the user industry like industries, infrastructure, etc. is doing well. And I see a good demand of cables going forward, the rising demand of cables. Wires is also doing well in the real estate, but I see more traction in the cable.
Okay, all right, more traction in cable. All right, Morgan Stanley in their note, they are working with revenue and PAT growth of close to around 20 to 23% CAGR over the next 4 years. You think it's possible, going by the underlying demand, going by the kind of capex you have put on stream as well? And over the last 10 years, I think you have grown in high teens, 17, 18% odd, but now they are factoring in early 20s. You think it's doable with the kind of tailwinds that we have from the industry and the capex as well that you're incurring?
Yes, it is possible. We are investing a lot of money in the new capex, in new capacities, and which will start coming on stream by July this year. And I think 20% plus growth is possible. For doing this, apart from strengthening our Indian market presence, we are also expanding in the global markets, and I think we are seeing good results. I see a good, capacity building in our company coming up from exports across the globe.
Okay, exports are how much of your mix, and where do you see that number headed? And 20% growth you're talking about on the top line, but bottom line as well will do as well, because there'll be some kind of margin expansion, I'm guessing. So in the next 3 years or so, how do you see that pan out? And also export contribution, where is it and where is it headed?
As we move towards higher, sales and higher numbers on top line, definitely there will be some expansion in the margins. As we are moving towards more exports, the margins will improve. At the moment, our exports are close to 12%, 11 to 12% of our total sales. And we want to take it up to around 18 to 20% in FY 26-27, because major capacities are going to come up by in calendar year 25 or financial year 25-26. So the growth in the exports should come in, more exports should come in from 26-27 financial year.
Got that. Mr. Gupta, good morning. Prashant here. From that Morgan note, right? I have these numbers. I wanted to throw them at you and maybe you can confirm. So they're saying FY27 top line should be about 13,400 crores and you'll do 1,000 crores net in FY27. Doable, sir?
I think it is definitely doable. 13,400 crore means we have to grow by 20% plus next year as well as next year. So it is doable.
And 1,000 crores net, right? In 27?
Yeah.
Okay.
Yes, correct. FY27.
Mr. Gupta, sir, I just want to go back to that point on, focusing more on the export markets. You said next couple of years, you want to take exports up to about 20% of the revenue, right?
Yes, 20% of the revenue. Correct.
So say about in 3 years' time, is that a 3-year vision?
Yes, yes.
So now tell us, how will this improve your margins? Because I think in the third quarter numbers, that was the only small quibble that the street had, that the margin marginally went below the 10% handle. In the near term, what will your product mix be? Cables are doing better, like you mentioned. And in the medium term, this 3-year roadmap, when exports improve, how much can you boost margins by?
See, we anticipate very conservative margins of 11% next year and going forward, but it will definitely improve. I don't want to give any aggressive numbers at the moment, but I'm sure that it will be on the plus side. So far as our product mix is concerned, I think 75% will continue to be the cables, and around 25% will be wires and flexibles.
Okay, all right. So 70-30, that mix will continue, and margins can move up to 11% on a conservative basis, like you're saying, as you go ahead on that plan. Quickly on CapEx, sir, I think the annual outlay now is 700 to 800 crores. So you're spending more on CapEx. What is the total that you will spend by the time this year ends, FY25? And, which are the streams where you're undertaking this CapEx? How could this sort of boost the overall business?
See, 700 to 800 crore will be spent in this FY25, and major capex is happening at our new plant coming up at Sanand near Ahmedabad. All the brownfield expansions in our existing factories are over, and there will be small capex in the next year also, which will be mainly maintenance capex or replacement of some of the machineries, old to new. And next year also we expect a capex of 800 to 1000 crore. But it will also mostly go into the Sanand project, and because it has to be completed by March 26 in all respect.
And all this is going to happen through internal accruals, or are you looking to borrow more next year?
We don't intend to borrow anything. It will be, the capex will be done through internal accruals and also the QIP money we raised last year.
Okay. All right, Mr. Gupta, thank you very much. That was helpful, and good luck to you for all of these plans. Thanks very much for joining us today.